I'm Frank Darras, America's top insurance attorney. Today we're going to talk about when can we finally drop that collision insurance we have on our car. We all need liability insurance that protects us from damage we do to others or their property. But this isn't necessarily true for collision and comprehensive car insurance. Those coverages cover repairs or replacement of your car if you're in an accident that's your fault, or losses caused by theft, vandalism, and natural disasters. The reason these aren't always needed is because the potential benefit may not be worth the premium you're paying compared with the actual risk. The biggest question to ask: would the amount paid by your insurance company really help you after you've paid your deductible, or would it be better to drop the coverage altogether and save that money as a rainy day collision or theft fund? Consider the actual replacement cost value of your car. You can do this pretty easily through the NADA guides, Kelley Blue Book, or the Black Book. Be realistic. Look at the condition of your vehicle, including the dents, the sun damage, the upholstery, and the mileage. Or you can call your insurance company. See how their claims department determines the actual cash value in your area. A good way to decide whether or not you need collision insurance is to look at the policy or look at the Blue Book value. Determine the value of the car. Subtract the deductible on the policy from the vehicle replacement cost. The remaining amount would be the actual benefit of carrying that coverage. Now consider the annual premium you pay. You got to divide this number by the actual benefit of the policy that it would take before the total premiums paid would surpass the actual replacement cost of the vehicle. That's a lot of gobbledygook, but here's a simple example. For a $15,000 actual benefit for a loss that had an annual collision premium of $100, the result would be 50 years. So now consider the likelihood of you getting into an accident. For our example, the likelihood of getting into an accident over the course of 50 years would be fairly high. So you'd want to keep the coverage. But for a car whose actual benefit is $700, the likelihood of you getting in an accident within 7 years might not be so high. You also want to consider other factors that will affect the likelihood of you getting into an accident. For example, have a long commute? The chances of getting into an accident are greater for someone who drives a few miles to work every day as opposed to someone who has a long distance drive. The older you get, the more comfortable you are with driving. You become more responsible and you learn to be a defensive driver. In this case, your accident rate will decrease until you hit the tender age of 80. Another good rule of thumb is the older your car gets, the less likely you are to need collision insurance. You might be better off saving that money for a new car. Really think about how much you could afford out of pocket. If you're living paycheck to paycheck, a settlement from the insurance company may be exactly what you need to replace your vehicle. However, if you have savings and are making a comfortable living, you may not be afraid of making a down payment if your car was totaled. I'm Frank Darras, founding partner of Darras Law, Ontario, California.